Hello, everyone. Good morning, good afternoon, good evening, wherever you're in the world. You're welcome to the Money Me Combos. Can everyone hear me? Okay, you're welcome to Money Me Combos. This is our very first session of many sessions to come rather. I am Adejoke Adekunle. I lead growth for Money Me. Money Me Combos is a Money Me Convos focuses on just bringing together experts to provide you with resources and tips that can help you settle in the US, build wealth, grow your career, and have a wonderful life in the US, really. And today's session, we're focusing on tax planning. It's tax season, and we have today a wonderful guest speaker who will be walking us through the basics of tax planning. And of course, if you have any questions around, planning your taxes, making payments, sorting, whatever questions you have around taxes, our guest here is able to take all your questions. Now, her name is Victoria Toyin-Moses. She's a tax advisor, has worked with the IRS, and has consistently helped small businesses and individuals, especially African migrants, with their tax planning. She'll be taking us through the basics of tax planning, and I will hand off the mic to her right away. So this session pretty much will span about 20 minutes. Just have your questions ready. Whatever questions you have, we will take them in the Q&A section or session. All right, so I'll hand over to you now, Victoria. Welcome on stage.
Thank you so much, Jockey. I really appreciate that intro. Can you hear me okay?
Yes, I can.
All right, thank you. So today we're going to briefly talk about tax planning, just ABCs of tax planning for Nigerians in the US. This can also apply to Africans or other immigrants in diaspora. The focus is just Nigerians today. So let us get started. So what exactly is tax planning? Tax planning is simply just analyzing a person's financial situation or making a plan to ensure that all your financial elements work together to allow you pay the lowest taxes possible every year. Tax planning helps with minimizing how much taxes you pay, and in essence makes you tax efficient financially, so you have more money in your pocket instead of paying the US government more money. Uh, Tax planning is very important. It's supposed to be an essential part of an individual investor's financial plan, or if you have a side business or a side gig, or if your income is getting into the $200,000 range, it's very essential that you have a solid tax plan so that you can make sure that you're paying the right taxes that you need to pay, and also make sure that you're paying the lowest taxes possible, while staying within the legal limits, and making sure that whenever you are audited, you have all the evidence needed to be able to protect yourself from any financial obligations that could come from an audit. So what are some of the things we need to consider while planning for taxes? Some of the factors to consider when planning for taxes include, like I said earlier, your source of income. Based on research, it's been determined that once an individual or a married couple begins to increase their income, and they expand to use different sources of income, then they become more open to increasing their tax liability. So the different sources of income have different tax implications. So for example, if you decide to move from working for an employer to owning your own business, that has its own tax implications. If you decide to get rental properties, that has a different tax implication. If you have a side gig, an online business, all those different sources of income that have different types of tax implications. Also, income size, like I said earlier, once your income begins to grow and you begin to get into that $150,000, $200,000 adjusted gross income, then you are more open to increase your tax liability if you don't plan accordingly for taxes. And actually, based on research, you are now more eligible for financial audits by the IRS. Timing of income is also very important. Whenever your income comes in, that also determines how much taxes you're going to pay. Investments, stocks, real estate, cryptocurrencies, or different types of investments uh, have different types of tax implications. So if you're not planning accordingly for the tax implications for those investments, for example, if you made some income from cryptocurrencies, there's some new laws in place that determine how much taxes you pay. So as a residents in the US, you have to be aware of those laws. I mean, ignorance is not an excuse. Changes in marital status. So if you go from single to married, or you go from married to single, all that also affects your tax liability. The addition of a child to the family affects the tax liability. Let's say your son or daughter is about 19 or 20 and they're leaving the house, that affects your tax liability as well. Changes in residency. When you move from one state to another, in the US, different states have different tax laws. For example, we that live in Texas, we don't pay state income taxes, but we pay other types of taxes like property tax. So when you're preparing for the year, um, if you live in Texas, you don't have to worry about preparing for state tax. But if you move to a state like Oklahoma or you move to New York, you have to pay taxes in those states, and the laws, you have to understand the laws and be aware of the tax laws in those states so you can be compliant. Earlier, I already mentioned business ownership. If you decide to own your small business, or um, apart from being a sole proprietor, maybe you decide to open an LLC or S Corp or C Corp, all that affects your tax liability. In addition to that, foreign investments can also be a very big part of what would increase your tax liability. So it's very important that you are aware of that. What are the benefits of tax planning? There are a lot of benefits that come with tax planning. And the number one main purpose for tax planning is to lower your yearly taxes. So the amount of money that the government has to take out of your income, you want to make sure that that's the lowest as possible so you can have more money in your pocket. Also, if you regularly plan for taxes, you would see that in the long run, you reduce your tax liability in future years. So it might not look like you're saving initially. For example, if you're paying a tax advisor or a tax planner, it might not look like you're saving money initially, but in the long run, the amount of money you save from deductions and credits adds up. So maximizing the tax savings from allowable deductions, also taking advantage of available tax credits. A lot of people are not very much aware of the changing deductions and the additional tax credits every year. For example, this year, because of all the COVID changes, there's a lot of credits out there that people are not aware of because, again, it's not something that they talk about on the news. So it's usually the experts who are aware of these changes and they can advise you on how to plan to take advantage of this credit and allowable deductions. It also helps maximize the amount of wealth that stays in your family. So over time, as you reduce your tax liability, that means you have more money in your pocket, and so that increases your wealth. and maximizes the amount of money you have for retirement. So if you work for an employer, um, let's say you're a W-2 earner, and you plan your taxes in a way that you are maximizing how much goes into your 401k. So let's say you're, maximizing the $19,000 pre your pre-tax deduction. So before they even remove taxes from your income, you already have a certain percentage of that income allotted to retirement. That already reduces your tax liability. Another way to reduce tax liability is to, set up a 529 plan for the children. So when it's time for them to go to college, you already have some tax-free money that you can spend on their tuition, room and board, books, and all that good stuff. So those are just some of the few benefits of tax planning. There are different types of tax planning. Of course, the first type is to reduce taxable income through income deferral or shifting. I just mentioned one, which is to, shift some of that gross income into a retirement savings account so that that reduces the amount of money that you get taxed on. So, for example, if I'm making $3,000 and I decide to, remove 10% of that and put it in my 401k account, I've reduced my tax liability every month by $300. So now I'm only going to be taxed on $2,700 instead of the $3,000 that was my income. And over the month, that adds up and saves a lot of money. So that's what we call like income deferral or shifting. Also, young parents can also do some income deferral by setting up flexible spending accounts. So when you set up a flexible spending account, you can save some money pre-tax for like childcare expenses. If you also have like elderly parents you're taking care of, you can also use the flexible spending account to save money for like elderly expenses and all that good stuff. Like maybe they have like assisted living that the parents are living in. You can save money for that pre-tax. Also, deduction planning. So it helps with figuring out what you can deduct. So if you're a business owner, this is very useful because it helps you figure out what kinds of expenses you can deduct, um, how to plan for those deductions, like the kind of receipts you need to save, things that you don't need to save receipts for, or like things that you need to account of, like mileage. Let's say you have a driving business, so you can plan for that by saving information on your car mileage for the trips you take during your driving business. Investment tax planning. So if you have investments, like Robinhood, Webull, Fidelity, um, and other types, Vanguard, Charles Schwab, those kind of investments in stocks, crypto, or mutual funds, you can actually plan for those kind of investment. You can save up money to plan for, like profits. If you make profits from those investments, you can plan for your capital gains taxes. Year-end planning strategies. So if you're a business owner, this very much applies. So when you are planning for like year-end, where you have to, complete your books and make sure that you have all your inventory, tax planning can help with that. So you start doing that like early on. So by the end of the year, you already have your plan in place, and you're not like running helter skelter to gather all the information you need. Other things are long-term planning. So like for estate planning, you can have a tax advisor help with like long-term planning. Short-range tax planning is also another type of planning. Actually, this comes into place when you have like some major like purchase that you want to make, and you want to know what the tax implication would look like with that purchase. So you can do like a short-range tax planning. There are other ones, but those are the most common ones. So, what are some tips to plan for taxes? Some steps to take when planning for taxes are, of course, review the considerations for tax planning, such as your income brackets, your sources of income. Are you making a major purchase? Are you making some major investments? Are you investing in foreign markets? So those are some things you have to consider when you're planning for taxes. Also, um, doing a complete, financial audit to get a solid idea of your income and expenses and investments. This is very useful for like investors and business owners. So if you are an investor and a business owner, like you can save money on your investment expense. But if you're not tracking those investment expense, there's no way for you to know that. So having a good audit of your income, things you're spending money on that can be deducted, those are usually very helpful for reducing tax liability. Adjusting your withholding amounts for on your W-2. So if you are a W-2 employee, you work for a company, planning your tax would give you information on what amount of money you need to withhold on your W-2. So right now, a lot of people withhold too much, so they don't have enough money from their income during the year, and some withhold too little that by the end of the year, then they owe a lot of money in taxes. So when you plan your taxes, you can actually plan for, okay, how much money do I need to withhold on my W-4 so that at the end of the year, I can have just enough that I don't pay taxes, and then during the year, I still have enough income coming into my pocket. A good way to save yourself time and money on some of this is to talk to a tax planner or financial consultant regularly to ensure that you're not leaving money on the table, so you're not losing money during the year or paying too much at the end of the year. And of course, you want to start planning early. You don't want to wait till last minute, because when you wait till last minute, then you miss the important details that you probably need to be aware of when planning for your taxes. So that was a short overview of tax planning. I don't know if anyone has any questions for me.
Okay, thank you. Thank you, Victoria. Please, if you have questions, you can just drop it in the chat box. But I have a question for you, Toyin.
Sure.
Now, for Nigerians who have businesses back home, are there any implications, tax implications around that?
So it depends on the type of business that you have back home. So if your business is not um, if it's completely separate from, you don't have it like certified in the US, or you're not like, you don't have a certificate of incorporation for that business in the US, then you can treat that business uh, differently from like a business that is functioning in Nigeria but is certified in the US. So they are kind of like intricacies to that, and it all depends on what exactly the business is, and if the business is completely, let's say you already had the business in Nigeria and it was strictly in Nigeria before you came to the US. When you are here in the US, there's really no need to file on that business. It's been in Nigeria, you're not bringing the business to the US, so that's slightly different. But if you're going to be, let's say bringing the business over to the US, then of course you want to make sure that you're filing on that kind of investment, on that kind of business, because of course once it's incorporated in the US, or you're doing any kind of buying and selling in that business's name in the US, then you could be liable for an audit if you don't file taxes on the business.
I see. Okay, thank you for that. Do you have any final comments or tips for Nigerians specifically?
So my advice for Nigerians, especially when this is your first time here, is don't the first tax filing that you do, make sure that you talk to an advisor. I know it's easy to kind of like get online on the software and just plug in numbers, but the folly of that system is that if you don't know or you're not aware of the credits that you can get, then you lose a lot of money. So talk to an experienced financial advisor close to you, or if you have people who have been here long enough that know the system, you want to make sure that you're seeking advice from them on what to do, but also be very careful about who you get advice from because um, everybody has like differences in how they manage their finances. So I always recommend like talking to like a professional. I mean, you would save yourself a lot of money in the long run, even if you don't eventually like use the service of the professional. At least you get a good idea of what you need to do when you're filing on
Right. That's great. And you are an expert. So for anybody who has questions or needs help with their tax planning, how do they reach you?
So yes, you can reach me at my email address, which is here, Victoria Toyin-Moses at live.com.
Okay, great. So guys, if you have questions, perhaps you have like personal things around taxes you want to ask her, please reach out to her. Please, can you show us the slide again with your email address? Thank you. So please reach out to her via Victoria Toyin hyphen or dash Moses at live.com. And you can also send us an email via digital@moneyme.com if you want us to forward any other questions to her as well. Thank you so much, Toyin. So quickly, we will run through a bit about MoneyMe. So I'll just share my screen. I just want to quickly talk about what MoneyMe does and how MoneyMe benefits Nigerians in the diaspora. So I will be doing that in a bit. Okay. All right. So, okay, can everyone see my screen? All right, cool. So pretty much what MoneyMe is about, MoneyMe really was established to help African migrants bank wherever they are in the world, like they never left their home country. Primarily, we're focused on Nigerians in the US. And as you know, as a Nigerian, when you leave Nigeria to a place like the US or wherever you're in the world, the first thing that happens is you're cut off from a lot of things. The food that you love, your friends, and all the time you get to spend with them wherever. And of course, the banking system as well. So you have things like maintaining your accounts being a major, major hassle, where if you have any issues whatsoever, sometimes you have to find a physical location to sort your account issues. Or you have to pay exorbitant fees or ridiculous fees really to sort out maybe any transfers or transactions that you have to make across borders. And then, of course, the transaction times in some cases just take forever. And really, MoneyMe focuses on solving that problem primarily for Nigerians in the US at this time. Now, what does MoneyMe give you as an app? Now, we give you, first off, the app gives you two accounts. So you have a USD wallet and you have a Naira wallet. By that, we mean you can pretty much move money into your Naira account. So think of, say, for example, what's a popular bank in Nigeria? A GTB, for example. You can have a bank account, operate a Naira bank account as though you're still in Nigeria. And of course, you can do the same on the US side. Now, three key things that you get with MoneyMe. First, you're able to convert money between Naira and the USD, and then USD to Naira. So you can move money from the US to Nigeria, and then from Nigeria back to the US. You can deposit money into your USD accounts, and like I mentioned, you can deposit money into your Naira accounts. and spend in Naira. So you can send Naira to someone else in Nigeria, or you can receive money from someone else in Nigeria. Say, for example, you have a business or you have some investments in Nigeria, you can pretty much collect money directly into your own bank account versus having to go through people. And then, like I mentioned, you own your own Naira account. You can move money both ways. You can spend Naira in Nigeria, and you can move money out of Nigeria. So pretty much all of that happens at no cost to you. MoneyMe is free to use. You're not paying maintenance fees. You're not trying to keep your accounts active. You're not paying transaction fees. And our rates are really good. So you can sign up to MoneyMe to try it out. Simply maybe just scan this barcode here, the QR code here. You can scan it, or you can check for MoneyMe on the App Store or the Google Play Store. You can also check with this URL. You can sign up using this URL here, which is bit.ly/getmoneyme. If you have any questions, please reach out to us via email at digital@moneymee.com. So pretty much that's that. I would like to say thank you to everyone who has been a part of this session. If you have questions about this, or you have suggestions for other topics that you think we need to discuss, this is something that we will be doing every week. So we will reach out to you with, other topics that we will be taking, and then for the other people, for the other guests that will be inviting to sessions like this. If you have suggestions, please share them again via digital@moneymee.com. Do follow us on social. We're on Instagram, we're on Twitter, we're on YouTube as well. You can watch some of our help videos and see an overview about what MoneyMe is on YouTube as well. And I'd like to say thank you again to you, Toyin, for being a part of this. Thank you for sharing your years of experience, all the knowledge that you've gathered so far. Thank you for sharing it with us here. And to everyone else, thank you so much for your time. I hope you enjoy the rest of your evening. And I would say bye for now.